Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today is Tuesday, and it's been a tough 4 or 5 days. As far as especially if you trade with my style. Last 2 days of the year gave you a little bit of a caution signal when most sectors all broke their 8-day and the 21-day, but kind of felt as if maybe it was a little bit of a trap because new funds were going to come in. So if you positioned even small for that, it was very easy to get a little beat up. And even coming in flat, I feel like I've come in flat the past day or two, very lightish. And still, level versus level has been a little tough. The action definitely feels different. These things don't lift as the way they used to. And a lot of names are more broken than constructive. So you have to be that more selective. So with that being said, you take a quick check here of the SPX. And when you just look at it, I guess objectively, obviously this was this V bottom right here, that followed the 8-day all the way up to this trend changing right there. Then you had a higher low right there, and then you had your your breakout failure 2079, and since then, it's been a fast and furious move. These 2 days happened at the end of the year. Then you had your doji. Then we broke this pivot right here, and then today it felt as if there was a chance we would hold the 100-day and have a little better action. So at this point, we did hold the 100-day. We're above the 150-day. It remains to be seen if today is the pivot low or not. But within that, you had some stocks have some decent action. Let's just go through some of them. Apple. Not sure, okay, what's next here, except for when this trend broke. Remember the 8-day broke right there. I became very tactical, and within that, it's still pretty easy to get a little chopped up. So here was your descending channel, broke to the upside. This is when it looked as if the market was going to continue into the end of the year. Okay, remember this? This was that great tier 2 Friday trade, and then you had this small little red dog reversal here that got us out of some, and then when it basically came in further than it should have right there, that should have been your stop, and then this happens. So today you got a little bit of a doji close. I was hoping it would close higher, came in towards the end of the day. I did take home some long. We'll see what happens. There's still a lot of resistance right above. So it's not, it's just not very compelling, but if you're looking for some signal, so if you sold here, you sold there, and you're looking for a trade, because I feel like all these are trades now, perhaps it pushes up a little bit and we'll see. Twitter was really the star of the day, and hopefully it wasn't just because it was some kind of rumor that Carl Icahn might be taking an activist stake. This was in my 2015 thesis as the #1 social media name play, and had a really nice day today. And you go to basic studies, you go to volume, and had a little bit of everything. It went green first, had volume, and broke this downtrend. We've seen this a few times. We saw it here, and then it failed. We saw this here, and then it failed. So it's happened a few times. It'd be nice if this one continues a little bit. If you bought it just like there's definitely, like, I have 10 ideas or 11 ideas on my 2015 thesis. Some people go and say, I'm going to put a feeler on everything. And if you did so, okay, this one was good. If you waited for it to trigger, you also got in. Everything else, I kind of said, let's send out a note saying we're below the 8 and 21 day. Don't be in a rush. Wait for some of these trades to turn on. But, a few other times it's been the same thing where, all of a sudden they go when you're not looking, or this and that. And if you waited for the perfect pricing, you missed out. So anyway, Twitter, you go back to the chart, really nice, push through this area. I guess now holding at least half of this would show some commitment. So we'll see what happens next there. Facebook kind of looks like Apple. Came in too more than it should have. Did give you a small little doji. Not even a doji, just came off its lows. If you want to hang your hat on that, I guess that's I didn't trade Facebook today, but this is when it gave up the 8-day. If you trade really tight, okay, that's when you could have got out. And now if you even tested here, I don't even know if we're so safe testing things here. Going back to the S&P, the SPX, it seems like it should. This is a spot to try. Now it looks like futures are going in a little bit. I don't know. Whatever you do, low gross, low net. and we'll have to figure it out as we go. Oil, still a problem. You know, the USO, volume, but still in the dead lows. Look at it when it broke this trend here, what it's done ever since. The XLE did have a, oh, actually, I thought the XLE looked like, you know, some people were saying it had a little reversal today. I guess not. Let's remove the volume real quick. Remove volume. Yeah, you know, we talked about that mid-level flag here. So once it broke below, if you were trying to play it for a follow-up move, that was your out, and now you got to avoid that pain. I guess same thing for OAH. You know, it gave you a mid-level area, back down to the lows. The banks have been crazy. You know, some people like Red Dog, how did you, you know, surgically remove that, you know, good trade to the highs in Bank of America and Citigroup or Morgan? You know, because I do look for signals. I look for those upper signals to get out of the way. And if you look at the XLF, you know, this day shouldn't have happened, right? If this was going to flag and go sideways and be strong, okay, and which it did look good right here. You know, if you were anticipating a breakdown, it's really hard to anticipate. You know, if you were looking to see get continuation, you wait. But then on this day, it engulfed that entire upper range, and right there, that was your get out of this trade now. You know, or at least reduce your risk, which I think I got out of the trade then. And then, you know, on this day, it looked like it was going to hold the 21-day, and then boom. And now look, you know, that came down further, or right, that should not happen, okay? But here was that signal if you trade actively. When you trade actively, those are the type of things you have to respond to or react to. I think I sold my Bank of America. So look, the same type of thing happened here on this engulfing day. First of all, this was the prior high, and then, you know, you could have either done it on this day when it engulfed the entire upper flag, or when it looked like it was going to be a breakout failure before this craziness. Okay, as I go through these charts, you know, I keep trying to tell myself that it doesn't look really healthy. You know, remember last year, you know, the last 3 months, I'm like, high beta tech, it's below every moving average. You know, between Google and Amazon and Netflix and Tesla, these are all below, you know, not only the 8 and 21 day, they're below the 50, they're below the 200 day. You know, that definitely has to mean something. Maybe it meant that, you know, once the year's over, they're gonna hit them. And I know a lot of people, not me, you know, put Google as their high beta tech of the year play. We talked about how if it does not hold here, wait. And look, now it's coming back to the lows and still doesn't look so good. Amazon was heavy all day too. You know, you had a small little trade because of the holiday season, but then just like everything else, you had a small little outside day here, tried to push you, failed. That was one signal, or at least when it broke this, and then you didn't have to be involved in that. Because whenever stocks are below all their moving averages, especially the 200-day, you have to be that careful. Netflix, you know, it too, you know, this just been, after the gap down after earnings, below all the moving averages. So whatever trade you try and do, you got to be careful. And here, you know, you had this big engulfing down day, and then a little bit of a bear flag, and then boom. This was a crazy trap. I'm glad I wasn't here for that day. Looked like it was going to go and be like a January effect bouncer, and then engulfed it, and now you're down to here. But again, when these things are below all their moving averages, you have to be that much more careful. And, you know, even trade it from the short side. You know, I haven't seen a stock like this in tech in a while. This was Kite. You know, this was, we talked about the 8 and 21-day moving average. Look how nice and tight that's been above it. Then you even had, you know, this breakout here. I feel like I missed out on this, you know, but a lot of guys in the virtual trade floor have been trading. But this is a great looking chart. We don't have many looking charts like this in high beta tech, in tech itself. So, you know, I guess we got to move through sectors. Let's see. Someone was talking about, look, Juno. We went over that today. We went over that in my note. Your new issue, very strong. You know, look how it pivoted off of that. See what happens with some time. A lot of these biopharmaceuticals have been pretty strong. Give it a little space here, though. Just had a big move. IWM, you know what? I came into the end of the year saying, wow, look at the little breakout in the IWM. If we have some new flows come in, it seems as if it could extend over the weekly pattern and create some alpha. I was long the IWM. You go to the chart, okay, and look at when can a trade change and when can you get out of it. And right here, okay, when it broke back below the 8-day, or right there, a little bit even lower, 119.5, this is where I got stopped out. because the trade changed. It didn't hold here, look to go sideways, digest above the 8 days of played catch-up. No, it broke it. So I had to get out of the way. So at least you missed out on this craziness down to the 200-day. Breakout failures like that should not happen. It should not have come all the way over, or even down to where it was in December. So now you have to be a lot more careful. Some say now this could be a right shoulder that builds here for another move lower. We shall see. But as of right now, that potential of a trade to hold above a prior breakout got negated. And when you trade real time, you have to measure the momentum levels. If you're trading momentum, if you're sitting here, I'm going to buy this thing for the next year, then you're different. Okay? Even those who look to be short. Okay? I know a lot of guys during this SPX move, they got blown out of the water because they just started too quick, and you've run out of money and you've run out of wherewithal. Hold on a second. Oops. So even if you're looking to be a short, that's fine. Okay, you do it when the market tells you. There are some guys that started shorting here because they thought there was congestion right there. You think they made it through that, or started shorting here. You think they made it into new highs? Unless you have, look at the market now, 2002. It's a crazy, crazy tape we got going on. Baba actually, talking about stocks that have been a little bit disappointing. I guess if you look at this in hindsight, came back in, it's retesting the prior breakout. You have another somewhat of a descending channel being built. I know we thought it could happen here. It didn't. This was the last time I traded and got out of it, and today I got back in a little bit. So we'll see what happens if we could hold this level going sideways. MU came out with earnings after the close, sold off into it. I'm not sure what it reported, but I guess see what happens right here on this bigger support. G-Pro I haven't looked at in a day or so. I don't think it's acting well either. You got a little bit of a box. Like again, remember the good old days when you have a sector or a new issue that has a nice 3-day move, puts on the map, consolidates for a while, then breaks out above the prior IPO high. That typically is good. That's a great trade. And then it continued, bull flag, and then this is when you get excited. Okay, and if it would have broken below this, maybe the momentum would have left, but instead it broke above it. That's a nice pent-up, great trading move. And then it changed right here. You could have had another flag, okay, right? Just doing a little chart tactics 101 that could have went sideways. And then what happened here? You lost the 8-day and then turned into a choppy mess. So you have to measure these things. Trend changed right here, really changed right there, and it's been a choppy mess since. That's when momentum leaves, and now it's tight. It's within this middle range. I don't think it really is worth being so enamored with, but I guess as long as it stays above this 62.81, looks like it's trying to hold this 4-day move. But I'd be just a little careful, and if the market gets a little better, maybe it tries to take that out. But markets at this point seems like it has a lot to prove. Gold. Nice 3-day move, actually right into the moving averages, had an engulfing day here, some follow through above the moving averages, continued. I think people were talking about the GWX, they've been waiting for this too. This downtrend that we mentioned multiple times, broke above, so now you'll see what happens here in the moving averages, but a nice little trade. And if you're looking for trades, you don't need a blockbuster move, there have been trades. All you can ask for is if you get a day 1, and then you get a day 2, day 3. That's what you want. Same thing from the downside. If you have an engulfing down day, all you want is another one. It's called follow through. That's what traders live by, follow through. Not day 1, the next day down, or closing the lows, next day up. That's choppy mess. That's not how I learned how to trade. I learned how to trade looking for a high volume day 1, then you get day 2, day 3, then you digest, and then it could continue potentially. You break a descending channel, you get some follow through, you hold above it, you continue. So that's kind of like this. This helped us save some money too, because here you go, you have this ascending channel, broke above, kind of failed right there, and then right here that shouldn't have happened. It shouldn't have broken back into the base if it was going to be strong, for at least a move in that time frame. And now it's right down here, so it's still not above the 8-21 day, it's below it. When it's below it, it's not as much, or there's no momentum the way when it went from 92 to 120 above it. So that's how you try and figure out which side of the market you want to be on. for me, when things are breaking down, I tend to get out of the way. I tend to be a little risk averse and then look for levels to play small bounce type trades, especially once you're down 4.5% off the highs. But even that could hurt, because if you buy something in the hole and you think it's going to go and you don't want to miss, you don't have enough, you add to it and then it comes in and then you ruin your average price and you wind up turning a decent little cash flow trade into flat or a loss. You look at the spiders today too, the 5-minute chart, and not the easiest thing to deal with, okay, but I know you had just this little downtrend. I put some orders in below when I left, and then all of a sudden I'm at the gym. I'm like, oh, we broke this downtrend. Let me buy some spiders. I bought some spiders, and then I put a stop in here because I'm like, okay, let me buy the spiders back just because it broke the downtrend, and I don't want to miss a move just in case we actually have a rally. So bought it here, and then by the time I looked, it broke the low, and I was out, and I got stopped out. By the time I came back from the gym, it was up here. So what do? You buy it here, you get stopped out here, and then buy it back here. And then I made some money. And then all of a sudden, I'm like, I got to take some of this. And then you get this, lo and behold, pull back right into the close. So, and then, again, then you make a decision, why did that happen? And, do you have the risk tolerance to take it overnight? I didn't take the spiders. But, Apple kind of did a little bit of the same, where, I guess you look at the chart now here of Apple, and if I was going to be really tight and just day trading, right when it broke this 107, I should have been like, okay, I'm done. Here's your uptrend from the low, okay, that wasn't so powerful and wasn't so fierce, and once it broke that, you're done. Instead, I'm like, all right, you know what, let me see if I could hold it for a day, plus, because it just came from 114.72, maybe it gets up to 109. So if you're day trading and on the 5-minute chart, there's money here. Even if you're waiting for a short, there's money there. If you're looking to do a continuation, it's a little bit different. And that's, I guess, one of the morals of the story is you have to know what your tolerance is in your time frame. You can come in every day and make some money. Even today, the market, remember, I'm like, you have to be patient. It could push up to 203 first before breaking through the potential low. You look at the spiders here, and that's what kind of took place. You want to talk about the H-cell setup. This is actually, this is what it is, okay? You had your move lower, and then here's your low. That's why this is your pivot. What was the pivot that we talked about this morning? 201.35. Bounced up into, the reason why I said it could probably get to 203-ish is because this was a prior resistance. So let's make this even a little bit bigger. Okay, got up there. I remember I made a little bit of money here. This looked like it was a good trade. Bought it around 202.30. If you're on the VTF, you saw that. I also bought some IWM. I also bought some Apple. Bought a little Twitter. That happened. And then if you were just, saying, you know what, this trend is down. I'm not playing this mini bounce. It's baloney, because you could take that side of the trade too. Okay, into this resistance, you could have got short, and that is your short. Okay, your starter short, because you want to short a rally. Then it comes in, and then you could add one once it breaks 201.35. Instead of waiting for it to just break it, because sometimes it's hard to just short a low and make money. But this, you could have shorted here, added here at a great average cost, and then you got paid. You could have done it both ways, once here, or even just waited for this to break and did it there. So anyway, we'll see what's next. We'll see if you open up and does it retest this 201.32 and go down? Does it open down here, retest today's low? And we won't know that until we step in tomorrow and see the futures, but you have to know what you can handle and how to play it. If you wanted to play a bounce, it was a quick one to make money, and if you wanted to do the H-cell setup, there was one that way. And right now it seems as if the bears keep winning until we get to a level where you could actually add some strength and get some follow-through, which we had a lot of the last 5 years. We're in our 6th year, so the question is, has everything changed? And if everything has changed, like if we open up down tomorrow and break tomorrow's low, I'll probably be stopped out of all my stuff, and I'll be like flat, and I'll say, you know what? I'm going to be flat every night until I see something really change, because this is different. And a lot of the charts do look different. So with that being said, I'll make sure that I don't get caught, because the last 2 days worth of paper cuts, definitely starts to add up. And then the last thing you want to do in a January time frame is start off on the wrong foot, because then you feel like you're behind the 8 ball. So if you're on the wrong foot, get on the right foot. If you're trying to figure out how to hold swing trades, this is not a great environment for it, considering we're below the 8 and 21 day. If you're looking to short this all the way down, keep doing it as long as it stays under the 8 and 21 day. And every time I lift those pivots, figure out if there are trades around them. Trades if it breaks to the short side, or trades for a squeeze if it goes back above it. And then one of the times it might be low enough where you get a 2-3 day move, and then you get to see if it does an H cell pattern then, not just, you know, one level up. It'd be nice to get a 2 or 3 level up versus just, you know, a level. So anyway, I got to go. Hopefully, you know, you're doing all right, and you're maneuvering, and you're trying to stay safe, and we'll figure out what is in store for us tomorrow. Have a good night.